welcome, guys. I'm Ryan Madrid, obviously, as you guys know. Jay Barbour to my left here is the owner of VIP Mortgage, the principal owner. And then Matt Oliver, who is owner and married to Lisa Lund of Lund Mortgage. So the reason why we got together today is to talk a little bit about the difference between correspondent lenders and brokers, and there's been a little bit of a resurgence, obviously, of the broker world. Matt has been in the broker world for a long time, but he came from Chase Bank, right, first?
Correct, yeah.
And how long you been at Lund?
Since October of 07.
October 07, okay. And then so Lund Mortgage has been around for?
Since 1999.
99. So Stan Lund, who originally owned it, who had passed away, which we had a memorial golf tournament for this weekend.
Yeah.
His daughter took over, and that's Matt's wife. And then obviously Jay started VIP Mortgage in 08?
2006.
2006. So so basically it's just some friends getting together with different opinions, working in two different channels in the mortgage business. So today we just wanted to, I guess the first question I have for you guys is, why do you think, we'll start with you, Jay, like why do you think there's been a big resurgence over the last like year and a half of like brokers coming back into the business, people going over to that world or thinking they might want to?
I think basically when I look at it, everybody has, pricing pressure changes and people want to get the best deal for their consumer. So I think when you look at it, I think everyone tries to evolve. As you go into something, you look at what worked before and why is it working now. So I think a lot of people are going out there and testing the waters, trying to figure out, hey, does this make sense to look at a broker channel? What does that mean? And I think it's just being educated. And I think one of the things we're trying to do today, right, Matt, is like educate people, because the worlds are the same, because we broker the same things that Lund brokers. So the funny part is a lot of it's just on what your price points are and where you want to have your compensation and how much support you want. So to me, it's really an education process. And I think what happens is we're trying right now is to bring education to the marketplace, because I think it's just how you want to do your business. Matt's model is very successful. They've been great at it. When you go meet with Matt and Lisa, I'm going to go be a broker, right? So I think there's a lot of amazing things that are out there. And I think it's just slow down, educate yourself. And I think there's a lot of people that have made the switch and it's working. And I think, if you're a good originator, no matter where you're at, I've always told people you're going to be successful. So to me, it's just, be where you want to be, treat the customer the right way. And let's all just make sure we continue to restore the reputation of the mortgage industry. That's our big goal at VIP Mortgage. And, I think there's just an opportunity, to educate people today. So I think that's kind of what the shift is.
Yeah. What about you?
Yeah, I would say there's been a big resurgence on our side in the wholesale lenders. We didn't have the support. We didn't have the technology that we have today. We didn't have that 5 years ago, 6, 7 years ago. So I think that's why there was a mass exodus outside of the broker channel. The wholesale partners that we have now are helping us as brokers a lot more. Pricing is a big one, like you said. The resurgence, I think, is coming more from just being able to have the technology that you guys have always possessed on the banking side. We've been getting it for the past 3 or 4 years on the broker side. So that's a big one. The pricing point tends to always be a stickler. And then obviously now with social media, there's a big presence right now, or over the past year, there's been a big presence on the broker side, and there's been a big push from our trade associations that are pushing it. But as you said before, I mean, if you're a good originator, it doesn't really matter what channel you're in, you're gonna be successful. So I would agree that the education part of it, you need to know both sides before you decide which direction you want to go.
Yeah, you bring up a good point there with the social media. It's like as a whole like business, there's been tons of marketing pushed towards the broker, not just like different brokerages, but like from the brokerage world. Yeah. There's been a ton of marketing, and you should get into the brokerage world. Let's talk about like you said, pricing. So pricing is a big push. So why is that? Why is it a myth, or is it true, or like how does it even work in the broker world versus our world?
I don't think it's a myth. I think every price has its point of saturation, right? So I think you can either make less compensation, make more compensation. It depends on how much you want to put into the transaction. And what I mean by that is how much work do you want to do, right? So on the correspondent side, there's a lot more bells and whistles that we add, and the support level goes way up, and things that you can do in your little channel that is a little different. Can you get the price better? Yes, you can. Could you do more work on your own? Yes, you can. So I think when you look at, from our standpoint, is looking at price, because we're all concerned about, our book of business too, right? And we don't want to lose originators to the broker world. And we also, understand that we broker the loans that we have to broker. And everyone kind of has that channel where they have, one or two sweet spots. United Wholesale Mortgage, everyone takes their easy stuff there. But if it gets hard and you have to escalate, it gets very difficult to get it through the system. Everyone knows that. But when you know you have the sweet spot, you go through that channel. So it's the same difference for VIP Mortgage. We know exactly where the best execution is. We know where the best delivery is. So on that price compression and margins of pricing, it's really of what are you providing to your referral customers? How much work do you want to do? And where do you want to set your compensation? So I know a lot of the average brokers out there are anywhere from 200 to 275. If you talk to people that have their own brokerage, it's not cheap to run that overhead. So everyone has a different model. And I think when you boil it down, look at what you're actually getting provided, what the cost of that value is, and then everyone can back into this math, right, Matt? It's very simple. There's not like a hidden, there's not a hidden point. The brokerage world doesn't have a point better in pricing. They may have their margin set at 250 basis points, but they got to pay everything through that. And then what's left over is the compensation. And every brokerage will be set up different. Some will be do it all yourself. And, we only take 10% off the top, but there's zero support. Or now, we provide little things because the wholesalers are, pushing back some technology that's helping out, with the fulfillment. And I think the nice part is when you see the easier loans, I think we're all going to feel that pressure, even the brokerage world, where the 250 comp isn't going to work on a $400,000 loan, right? Because they're too easy to get through. So I think that industry, as far as the broker channel, has to adjust too. So they're going to be having that pricing pressure, and then you might go from lender paid to borrower paid, and borrower paid, you might do that loan just to do it for $1,000. So I think the flexibility and the autonomy to do what you do in both worlds give you the ability to, flex in and out on price. So I think it's a myth. I think it's a lot of good marketing, and it was time, right, for the brokerage, channel to raise their hand and kind of come back. And, there's going to be some people that move over there. But if you look back in the day, probably, 60% of the business was done by the broker channel. Yeah. And then you kind of metamorphosized back into the correspondent channel, which actually helped, our consumers, because what happens is you lose the ability to perform. So I think that's the key is like, where do we go? How do we get there? But we're all dealing with the same deck of cards. The nice thing, from our channel is we can broker everything we want. And on the in-house stuff, we can choose wherever we go on pricing. We don't have to disclose things. If we're at the closing table and something comes up, we can give a lender credit of $1,000 or $3,000 or make a deal work. So I think if you're really focused, like we are, building relationships for life with our customers and helping people with heart achieve more than they ever could alone, we're able to do those things that differentiate us at the closing table and controlling things. So when you look at that pricing, is our price a little higher? It may be higher depending on which brokerage you go to, but when we're touching everything from A to Z and we make the decisions, we draw the docs, fund the mortgage, sell the loan in the secondary market, it just gives us a lot more autonomy to control that transaction and that price point to whatever we need to for that particular transaction.
Well, it's just like with anything, the consumer dictates a lot of that for us on the broker side. I mean, the consumer dictates where I price a loan, on a daily basis. I mean, if I've got to compete against a better mortgage or somebody that's got just airtight pricing, I mean, I got to take them to a certain lender that's going to offer that better pricing. I think on the broker side, we've been hampered by the federal regulations that came out with the passage of Dodd-Frank in 2010. I mean, brokers are capped as a broker company. You're capped at 3% for a number. Mathematically speaking, you're capped at 3% on what your ability is to make money is at a 3% cap. Is the way I'm wording it. So most brokers are at about 2 to 2.75, like you said, but that's the broker side of things. That's the LO. I think on both sides, your LO probably makes the same side as a broker's LO if you will. It just on the broker side, I think we would wish that number would be a little bit higher so that we could expand more. But we are held to a lesser number due to the Dodd-Frank regulations. I mean, that's been a big reason why there hasn't been a complete entrance into the broker side, is because we are capped with the Dodd-Frank regulations.
Yeah, so it's like if a LO came from our company over to your company, and they wanted to make 150 basis points, and you guys are making 200 on it, and you got to pay the overhead and pay everybody. There's less money to bring over to start a company because it's expensive, right?
Yeah.
To run that whole process. Your guys' model is brilliant, right? And that's why you guys have been so successful. It's so consumer driven, and you do incredible marketing, and you guys have the radio ads, and you've been doing the same thing forever. This driving massive amount of business and then over time, obviously, right, you've built great relationships, and those people are coming back, and you still have realtor relationships and stuff like that as well. But a huge amount of your business comes from, I remember you telling me one day that, like, we were going to go to lunch or something, and you're like, well, our ad is on at, like, 10:50. You have to be on the phones at 11 because the calls just come through like crazy.
Yeah.
Right? And it's just you and Ryan basically doing them at this point, right? So, I mean, you did $80 million last year in business, basically behind the scenes. Nobody knew.
Yeah, I mean, it's just a different world on the broker side. It's hard on the broker side to scale. I mean, you can't come in and start a big company. Yeah, in my opinion, I know that there's other people that would argue differently, but it's not a situation where I can have 100+ loan officers. I just don't think that's going to work in the broker model, and that's why it's staying where it's at. So it's hard to scale on the broker side of things, and that's why I don't think there has been a real big exodus. I mean, I think there's a lot of people moving over, but it just depends. Like going back to the beginning, it goes back to what do you want to do as an individual LO? What's going to best suit you? There are LOs that are better suited on the banking side. There's LOs that are better suited on the broker side. It also goes back to their relationships with their realtors, with their partners, with what's their clientele.
Totally.
That's been a big eye opener for me, is seeing really the LO dictates where they want to go, in my opinion.
Yep.
So that lends to a good next question. So if you have a recruit, or if you have somebody, I know you guys don't bring a bunch of people on, but I know that other brokerages that do. So if you have a recruit that comes, and what would you tell them is why a correspondent lender such as us, VIP Mortgage, is a good fit for a new LO, or not a new LO, but it's an LO coming from maybe another bank?
I think, Matt, you hit on some of those questions, right? It's like, do a good job qualifying that candidate that's coming in, find out what he needs, what kind of support he likes, and kind of where his vision is. So to us, it's really, when we bring somebody on, it's a little different. We're not always just about is VIP the right fit. It's about, what do you want out of life, and where do you want to go? We want career-minded people that want to grow, and we want to be able to educate them, right? We're big into education. We're trying to show you what's behind the curtains. Raise your hand if something's coming up, so we can show you all the whys of how the business works. Because we may sit down with somebody and we say, hey, the brokerage world looks better. I mean, we have some people that we're talking to right now going, hey, let's vet this through together, because I think what I know in life is I know what I don't know, and I don't know a lot. And I think, I think at the end of the day, we've got to understand that, I'm friends with Matt. Matt will call me, Lisa, we're all just in this, big fishing pond, and there's enough fish for all of us. So to me, it's just really aligning with the culture and, doing the things that are right for the customer. And I think, we've all got to maintain that no matter what we do. I don't want to see the brokerage world get the reputation it had before, where, if the rates plummet here and the feds, do some changes, or, something happens with, the Trump administration that causes, interest rates to drop, and, everyone can get back in the business and it gets deregulated. I think some of the regulation, the pressure that you were talking about earlier, did that change the component? But there were some people out there that did take advantage of the situation and were taking advantage of customers that were not able to understand what was going on. So I think it's our fiduciary duty to, be mortgage, originators, and, do the right thing for the customer. So when I look at somebody coming in, I think both worlds are, very stable and they're good. It's just, to me, I want to be able to, like I said earlier, control it from the start to finish. And I'm more of a control freak, and I want to know if I mess up on something, can I call Jay Barbour and he gets it because he originated before.
Right.
And that relationship took me, 10 years to build, and I can lose it in one transaction. So
I remember asking saying that same thing to Lisa one day. Of course, she's like,
Yeah.
I get the same exact thing. I just pick up the phone and I go, but not everybody's Lisa, right?
Yeah.
Right.
Yeah.
So you have all these other, we're talking like the 1% of the 1%, right? So you have a lot of other people that maybe don't have that same sort of, ability to go over to talk to, call the head underwriter at United Wholesale Mortgage and be like, hey, I need to push this through. But what about you? So if you have somebody, I know that, like we said before, somebody else going to another brokerage, or somebody who maybe just left the correspondent world, now they have their own brokers, now they're hiring like crazy. Like, what are they saying to people?
The initial one that I've been hearing lately is it just goes back to price, not to beat a dead horse to that, but for the individual person, it's still for the ones that are coming over, it's price. But then I'm not sure that they're fully grasping there is more work. They got to learn a bunch of different lenders. I mean, there's a lot more learning that goes into it. Most of the people that have come over have embraced it. For them, they feel like it's a breath of fresh air. It's something new. I think we all could, see how that would work. Yeah. So I think, again, my conversation with a lot of them is, you better be ready to get your second win, because you're going to have to pick it up over here. You're going to have to learn some new things here and there. I think when you dive into the specifics of it, you'll like working with different lenders. You'll enjoy learning new programs and that kind of stuff. That's been the pricing one's always comes up, but it's more or less on my side. Okay, the price is going to be there, but are you ready for the other stuff? Are you ready to learn 4 different lenders and have all these different logins and that kind of stuff? As far as the control part of it, it's gotten better. It wasn't that way prior, like we talked about. The investors or lenders that we work with you can pick up the phone and call an underwriter. You can speak with whoever you need to within reason. That's not up on the high chain. That's been a big thing, but that's been the progression forward that the broker channel has brought forward. They knew it wasn't around in the past, and that's kind of what brought them down. So they've changed that aspect of things, which has really benefited the individual LO at a broker shop. Obviously, like you said before, there was a lot of mess that was going on before, but the loan officer licensing changed a lot of that. I mean, I don't know if a lot of people know this, but we didn't even have to be licensed until 2009 as individual loan officers, which I think was crazy. But that kind of weeded out a lot of the bad people that were in the industry. So,
yeah, and I think we're all in the agreement that both are good, right? And that I think the opportunity to, for you guys to have a correspondent site as well. But it's kind of like now, like I think Jay was saying, it's like United Wholesale Mortgage is kind of like your correspondent at this point, right? Like they run the ones, the easier loans straight to them, straight through, everything's smooth. It's when it gets a little bit trickier. And for us, it's just running it through corporate. And then we have to broker some of the hard
But
stuff.
that's been the change that UWM's brought forward, is they've forced all the other investors that we deal with to be better. They've forced a lot of the partners that we work with to be a better partner.
Yeah.
UWM controls, I think they did $42 billion last year, $42 billion. So they are the big player. They did 25% of the wholesale industry. They funded 25% of the deals in general, but their progression has really picked up the broker side of things, because they're forcing everybody else to be better brokers, or on our investor side to be better investors to the brokers. That's been their big push, and obviously they're the big push behind the marketing of trying to integrate people into the broker side, as you mentioned before.
Yeah.
Yeah, so for us, it's that same thing, right? So brokering, we all broker, right? VIP brokers loans. We have the same onslaught of brokerages we broker to, right? So when you do a non-warrantable condo, we're probably all going to the same place.
Yeah.
So I think there's some myths out there that are not, relative or not, in the focus. So to us, it's like educating them, right? So for us, the only difference is if you called me today, Ryan, and had a deal and said, look, we missed all this stuff, because what happens in our industry is, unfortunately, no matter how good Matt is and how good the people are in the brokerage world, we have no different than, Ross's great group here on Central. I just came from their branch, right? The guy just missed a car payment, right?
Yeah.
And okay, so what happens then, right? So Well, we can move a lot faster as far as like getting loan documents out. I mean, we have a huge issue. So what I mean by the control on that stuff, and I think I need to go a little deeper on that, is we could actually fund a loan today without any approval, without any documents, right? So that's the pickup you get with that relationship. Lisa might be able to pull that off, because she has that relationship. She's going to get whatever she's going to get, and she's built that relationship. So I'm not saying it can't happen in that world, but I think the difference is for us, when you can do that stuff and we're making the decision because it's our money, it's our risk, it's our responsibility. What we're trying to do is make sure that our referral partners that we count on every day for them to be able to provide for their family, when they give us a deal and we say it's a deal, a lot of the things that are happening that are very hard in the mortgage industry, we're trying to shield our customer and our the consumer and our referral partners from a lot of that. So we don't want them to know what's happening, right? Yeah. Now, it may be stressful on our side, and I know you guys do the same thing, Matt, but those are the little things where we're able to do that, right? And there's, there'll be at a time, too, where the mini cores will come in and, someone like, Lund Mortgage will actually, and I haven't got you guys there yet, like where you'll do a mini correspondent line through us and, you'll see the advantages of some of this stuff. And I think for us, it's really just, we want to work with good people like Matt and Lisa, and we don't even work together, but like as far as doing business together, but we work together because I think our camaraderie and like what you guys stand for and how you do your business, I have a ton of respect for you guys. And I wish I did 80 million with like 3 people or whatever it is. I mean, I know you have more people than that.
He's his own docs on his desk then.
Well, no, but I know what you're saying though. It's more about sharing and collaborating together and sharing ideas and that kind of stuff. And that's what I've always appreciated about the relationship. I mean, it still goes back to every LO is going to dictate where it's at. I mean, truthfully, and this is just our practice. We don't have to do those things. We don't have to fund loans without having docs. And I know you don't have to on probably 99% of them. You have the ability to, but it just goes back to the individual LO. I mean, right. or the individual LO at that time. I mean, our personal average clear to close was 19 days. That's a testament to the lenders we're choosing to work with, but also our experience and that kind of stuff. Not everybody is going to be at that pace, and there may be some that are faster and there's some that are slower.
But you're good at putting the loans together, right? So I think it's back to the originator, right? If you're great at your job and you can do your job, right, you can survive anywhere. It's just what platform do you want to be on and understand the numbers, the financial side of it, and understand pricing. So
because that's always a myth we get from realtors from time to time is that I don't have the ability to call you and say, hey, go ahead and fund this loan and we'll get all the documentation later. And that part's true. I mean, we don't really have that access to it, but you guys try to do a bunch of stuff up front to prevent that. That's what we're trying to do. We gather a lot of documents and try to do everything we can so that it doesn't get to that point. But it like you said, just goes down to the individual LO, in my opinion, on that kind of stuff. But the myth is the control thing. With some lenders we don't have it. With a lot we do have way more control than I would say we ever have in the past. And I don't know. It's not worth debating on who has more control because I hope it doesn't ever get to that point. That's the whole goal, is to not ever let it get to that point. But each individual LO could push it to that stature. I mean, like you said before, we have the ability to correspond with different lenders. UWM will do correspondent. You guys can do broking. So we're all in the same fishbowl. It's just how's the push forward moving? How's it moving forward, I guess is what I'm looking to say.
Yeah.
Right, exactly.
Well, the fun part is when you see that stuff, right? I think it's just you guys have the ability to go set up just the same way VIP does, right? So even if you go into that world, right? So for us, in the correspondent world, you have the big retailers, which you came from, Chase. Then you have the correspondent, and then you have the mini core, and then you have the broker, right? So we like to be in the middle, so it gives us the best of this world, the best of that world when we have to have it. Yeah, I love what you're saying. Let's never have to. If I can do that, then it makes our price even better because we don't have to cover mistakes. Right, we don't cover mistakes. We don't. There's a lot of things that happen, but we also have the broker world. So those are just the differentialities between all of them, and I think every spot has a place. But I think the fun part is, I know you're into education, which I love that you and Lisa go to all the functions and give back and try to get us all on the same playing field, because it should be the same playing field. It should be able to, like the 3% cap, it shouldn't be in there, right? You guys should be able to do what you have to do because you're disclosing it, right? So I think there's a lot of validity in that, and I think from the standpoint of just helping originators make a choice, I think the choice is over-educate yourself and make sure that you get the right spot.
Just find out what's going to work best for you. Ask the questions. I mean, there's not one side that's going to work for everybody. I mean, it's each individual person. Lisa and I always talk about with different clients. I mean, I have certain clients that I can take to some lenders and some that I have to go elsewhere. It's their mortgage DNA is the terminology we use all the time. Same thing with the loan officer coming over. What's your DNA? How do you work? I mean, it's basically your working DNA. What's going to work best for you? Do you need a lot of support? Do you need that kind of stuff? Are you okay on your own? Are you a self-sufficient LO? Are you okay with pricing? Do you want to close the loans in 10 days, 15 days? I mean, that's where you got to find out which side's going to be best for you. Because we have lenders that can't close it in 25 days, and then I got other lenders that can do it in 7 to 8. It just, for us, we have to position the loan appropriately to according to how the consumer is, which I'm liking that to be in. The loan officer needs to position themselves on which side's going to work best for them.
Yeah. Any closing words there, Jay?
For me, yeah. All I know is that back in the day, we had probably one of the funnest trips of my life, but I almost died.
Well, hold on. Let's just talk about that just for 1 second before we wrap up.
It was fun.
So we flew into Chicago, right?
Chicago.
We got in a car, drove to Notre Dame to watch a Notre Dame game. And then from there, we went back to Chicago and watched a Cubs-Pirates game.
That was in a 3-hour Uber ride.
That was.
Yeah.
And then we woke up the next day, and we went to Whistling Straits, played golf, and then we went to Monday Night Football, Kansas City, Green Bay.
Yep.
Whew.
Yeah.
Well,
and the night before that, the night before that was when you guys had the golf tournament. So you had that golf tournament Friday all day, and then we flew out at like 4 o'clock Saturday morning.
Yeah.
Yeah.
So that was a long 4 days.
Tina's Rose. We had
Tina
a
Rose's
fundraiser for her
right.
breast
God,
cancer.
And then I
In
think
my backyard, we
went,
were 5 a.m. wheels up off the tarmac.
Yes. And then I think you went to Bannon Dunes like 2 days later.
Yeah, and you wouldn't go with
Oh,
me.
no chance. No chance.
Wow. See, we
So
can
anyway,
all work together and play
so
together.
Exactly.
So the fun part is we're all buddies. We want everyone to succeed, and we're all just here to help. So
Yeah.
thanks, Ryan, for having us on.
Yeah, no, I think it's good that people understand if they are looking to make a move and either leave the correspondent world and go to the brokerage world or vice versa, that just have a conversation, right? Talk it through, because I think we all agreed here that it's the LO. They need to figure out what they want.
Yeah.
Right, and what avenue they're going to go in, and even if they go to, it's like there's multiple options even in the correspondent world and in the brokerage world. Lund might not be the right place for person, but it might be another brokerage, right? And the same thing with VIP and other correspondents. So again, this is just all about education. We want people to understand what's going on. That's why it's called Real Talk. Tom Ward actually named the podcast, but that's what it is. We just want to bring real stuff so people to really think about. And obviously, when I told people that we were having this conversation, they're like, "That's crazy. Why would you do that?" But because this, right? I think
it's the education part of it.
Yeah, people don't really want to know.
Hashtag education VIP Lund Mortgage. We'll do it. Come on.
That's a long one.
That's a long one.
Yeah, I don't even know what a hashtag is. I just learned about it.
Pound sign.
I know. No, I hashtag to beat, right?
Yeah.
Anyway, thanks, brother.
All right. Yeah.
All right.
Thanks, guys.
Yes, thank you.
Appreciate it.